Good morning, traders. This is Doug Campbell with Right Way Options and the morning market preparation video for October 24th, 2017. So, yesterday we had some bearish price action. We actually had some sellers show up. Nothing terribly bearish, but we left behind bearish marker patterns that we need to pay attention to. And it also presents kind of a challenge for us. First off, we're in an extremely strong bull run. Lots of upward momentum here. Yesterday we get some profit taking. We get an evening star pattern placed on here. And I know everyone is kind of thinking, well, that means that the market absolutely has to go down. But then how would you justify or how would you rectify that with the fact that the futures are pushing for more than a 50-point gap up open? See, one of the things we tend to fall into is we tend to lean toward our biases. And common sense tells us we're up this far, high probability that the market will pull back. And I agree with that. At the same time, you want to temper that with the idea that, or with what other things that are going on in the market. First off, we have a huge number of earnings coming out. So far, though, earnings have come out pretty strong. If these earnings today continue to come out strong, there's no reason at all why that can't fuel this market higher. And anyone who got short gets squeezed out again, just like last Thursday. So don't make assumptions. Learn to follow price. We need a follow through to assume a downside move. We don't chase or try to predict this downside move. So we want to stay with the price action of the trend, stay with the chart until that chart begins to break down. Okay. Now, I have been suggesting that you lighten up your positions. You have fewer positions. You trade a little bit less right now because we're likely going to go into a bit of a volatility phase where we have a whole bunch of earnings. We're going to get a lot of back and forth, possibly even some violent price action. We can expect probably a lot of gap up and gap down mornings and probably intraday whipsaws where we whip up, whip back, whip up. We could be all over the place. So it's going to be probably a little bit challenging for a lot of folks. Stick with your plan, stick with your trade. Just make sure you're focusing on trend and price action for those decisions. Don't speculate that one thing absolutely has to happen. So it's a problem that, and the reason I'm cautioning so much on this, I guess, is because it was a problem that affected me for years. Years that I spent trying to fight the market, thinking that I could predict it. And my results proved to me that I could not. What I learned to do was just simply relax and follow the price action and sell into strength when I feel like I'm overlong the market, the market is overstretched. I lighten up my account, take profits into strength, and then I wait for the next trade. I don't try to predict which way it's going to go. I just want to follow it if it does go there. So right now we're showing a bullish move in the market this morning, almost to the point of carrying us right back up to where we were yesterday at the highs. Now we're pointing, currently we're showing 90 points higher in the Dow futures. So it's growing as the market goes on. Now that could be a false pop and it sells into that just as soon as the market opens. We saw that yesterday. If we take a look at a short-term chart, we had a pop-up open and we sold into it immediately. I mean, the second the market opened, we started selling into it. Now we're gapping higher. All of those folks that got short are going to get squeezed hard this morning. And it's probably going to be a little bit painful. And that's my point in trying to predict. If we look at the SPY has a full-on bearish engulfing candle here. That, again, doesn't necessarily mean that we have to sell off. Remember, we're in a very strong trend. We could just simply fall into a nice sideways consolidation. Okay. Let's take a look at the Qs. The Qs evening star pattern at resistance. Clearly a bearish pattern. And right now, the Qs aren't showing the pop in the market. They're not following along. So the Qs actually could be in a little bit of trouble. But it's going to be hard for the Qs to really go down sharply if the rest of the market is going up. So keep that in mind as we go forward. Stay with the trend until the trend breaks. IWM just really didn't participate much yesterday, and it hasn't been for a couple of weeks. It's just been kind of chopping around sideways in this very narrow range. And even though inside that range yesterday, we had kind of a bearish pattern show up, and that is this pattern here. It is an evening star pattern inside there, or sort of an evening star pattern inside the box. But here again, we just want to allow that pattern to continue to develop. It'll tell us if it's going to break down. It'll tell us if it's going to break higher. We just have to wait for it. Futures are gaining strength as we talk. We're now up 100 points on the Dow futures. They are pressing hard to the upside and going higher. So be careful if you got short. Be careful where you are. The market is loving the earnings right now that are rolling out this morning. Let's take a quick peek at the VIX. As I mentioned yesterday, the VIX had been down here in this lower area, and that we could probably expect a little bit of just anxiety, fear coming into the market because we're so low in the VIX, and we got that little bit of a fear spike yesterday. Now that's going to get probably completely reversed this morning, and I wouldn't be surprised to see it flip back and forth a couple of times intraday today. And that's just one of the things about big earnings periods where we go through lots and lots of data pushing that market back and forth and all over the place. So with that in mind, just stay with your trend and try not to predict. Remember, one candle does not make a trend, and we need follow through to any candle to confirm a short-term direction. On the economic calendar today, we have PMI coming out here at 9:45 this morning. Now, PMI has been very strong. Forecasters are expecting that to remain strong, and you can see after that there's not much going on the economic calendar. However, on the earnings calendar, we have about 190 companies reporting today, and some of those obviously have already reported. I'm guessing, yeah, Caterpillar here has reported. Look at the gap up here on Caterpillar. McDonald's, I can't tell if McDonald's has reported. That's one on the list today. There's a lot of companies reporting today, so it's hard to know which ones have already dropped their earnings. LMT is one. I'm not seeing a report on that one yet. General Motors is reporting. That one looks like it's gapping up slightly. So we're going to have lots of movement in the market, getting a gap up here on 3M. So lots of movement in the market this morning. Be careful, be cautious, be safe. Don't predict. Learn to follow the price action, and stay with your current trade plans until those plans start to break down. Okay, everyone. Hey, I want to wish you all a fantastic day, great profits. And if this is the first time you've ever seen this video, please do me a favor. Click on that subscribe button on YouTube and the follow me button on Facebook if you happen to be watching it there. Also, it does help me a lot when you click out those thumbs up buttons and give me those likes. Helps those algorithms show my videos to more people. And please feel free to share this with anyone. I do this as part of my market preparation, and I just happen to share it with everyone. If you find it useful and something that you can utilize, and friends, family, or someone else could utilize, please feel free to share it. It's yours to use. Everyone have a great day, and I will talk to you all very soon.